It used to be that GAAP allowed companies and their accountants some alternatives in how they presented other comprehensive income. I gather that the new guidance, ASU 2011-05, removes those options. Does it specify how comprehensive income should now be reported?
ASU 2011-05 reduces by one the number of alternatives that are available for a company in presenting comprehensive income. Prior to this ASU, companies had three choices. One, they could put it alongside net income. Two, they could put it in a separate comprehensive income statement. Or three, they could put it in a separate column in the stockholders' equity presentation. And putting it in the stockholders' equity presentation would have it alongside other changes in equity that have taken place during the period. IFRS doesn't have the third alternative. So again, in terms of reducing differences between FASB and IASB, they decided that they would come up with a solution where there's only two alternatives now for the presentation of comprehensive income. Again, one in the income statement along with net income, or two, a separate comprehensive income statement, meaning you cannot put comprehensive income in a stockholders' equity reconciliation anymore.
Well, on one hand, ASU 2011-05 is a FASB project. On the other hand, the IASB also issued corresponding guidance to amend their standard on the presentation of financial statements, didn't they?
They did, but it didn't make a substantive change in IFRS. It was really a FASB document where the changes took place.
Well, it's a small step forward toward convergence, right? So tell me, what's the effective date for implementing the standard?
Becky, many of the joint project, when they're complete and issued, require retrospective presentation, meaning in order to have comparable presentations, you have to go back to the prior comparable period and restate as you have in the current period. And this will be true for the comprehensive income standard also. ASU 2011-05 is effective for public companies this year and for non-public entities in 2012.